Hi everyone, welcome to the Startup Evangelist. I believe, if I'm not wrong, we are in episode 10. This is the home of ideas for Africa. Today I'm joined with Levi Obiero, a serial entrepreneur, businessman, venture builder, etc. We'll learn more about what he's up to. Mainly the conversation will be around fintech and just building, convenience businesses in Africa. But just to encourage you to keep subscribing, sharing, and liking, and also share your feedback with what you're learning, what you're hearing from the conversations we've had so far. Levi, welcome to the conversation. Good to have you.
Thanks for having me. Happy to be here.
Yeah. Maybe to summarize who you are to the audience, for me, I know you from different hats. Obviously, you've worked in product management, product development, business intelligence, and venture building with entities like Asoko, Koko Networks, and various fintechs. But maybe just give a brief about your journey and that has brought you to this chair you're sitting on.
Yeah, I mean, it's been an interesting journey, and thanks for the intro, Dan. When you're describing me, I'm like, who's that? But
I have to hype you up before I...
yeah, but I'd say, who am I? I'm a businessman, and right now, primarily building in tech, focused on fintech. And looking back, people say, when you look back, hindsight is 2020. That's when everything looks clear. So I'd say my journey from whenever I was born up to now, things have just been lining up almost for this exact moment. Even for me, starting to talk to you about Paycloud, which I think we'll talk about later. Everything seems to be just lining up for this exact moment. So I've worked in African tech for the last 10 years. And that's been in 3 other tech businesses. Paycloud is the 4th business that I'm working in. And the other 3, I was either very early or pre-revenue. That's primarily been it. And every single experience has built on to the next. And whatever I'm using in Paycloud is what I was able to learn from the first, all the 3 experiences. Yeah.
And would you say your interaction with all those businesses has been from product, marketing, and growth?
Yeah, actually,
in summary.
maybe I'll start with the first business I worked in, which was Asoko. That was a business intelligence and research company. That built 2 skills within me. One is research. I was a Google guru. Of course, in campus, you're taught how to research, for all those publications. But it's very different when you're doing something like market research. So if I'm looking for anything on Google, I'd go even to page 12.
Yeah.
So by the time I'm learning something, I've combed the internet.
Yeah.
And then the second skill there was business development. And I was quite fortunate because I got a job straight from school. So I finished my exams on Friday.
Yeah.
Monday I was working.
You didn't even have time to rest.
I did not.
Yeah.
Fortunately.
Yeah.
And so I was leaving school on, finished my exam on Friday. Monday, being onboarded, and already I'm working in this, corporate, environment. Then at the time we had a partnership, with MPESA. So January, instead of just going to the office, I was going into sector board meetings. So I'm meeting a lot of these CEOs. A lot of the people who drive policy. I'm understanding how they develop policy and all that. And so that builds confidence. So from there, you're meeting them. You need to introduce yourself. You're trying to get a meeting with them.
Yeah.
And, deliver whatever it is that you're delivering. And which builds that business development, skill, which I now use in SaaS on Paycloud. Then from that, I think I got a good sense of that. Then I got headhunted to join Koko Networks to expand their offering across Africa. At Asoko, I grew very quickly. I was one of the first hires, and then I was running the research team across Africa. Actually, I just did that for 3 months. Then Coco came and headhunted me. Then at Coco, we're supposed to expand across Africa. Then, in tech, things happen the way they do.
Yeah.
So initially we thought we were planning, we're going to launch in 6 months. After 6 months, we're going to be in country X. Then, as always, something always happens. Sales were not growing as quickly as we thought. So the entire company, repositioned itself to double down on sales. So, I started with expansion and then, went now to deep, looking for that end customer, which is, I think, 70% of Nairobi's population. So I'd go to places in Nairobi that I've not seen. You look at, the Lavington, even where we are now, Riverside. This is
It looks organized and everything,
70% of Nairobi doesn't look like this.
Yeah.
And so I got to understand that customer segment, learning to sell to them, learning what works for them. You could put like nice looking billboards and all that, but for that customer, they want to see you where it is they are.
Where the action is.
Yeah. So that was the summary of all the experiences, but I think at Coca I was in like 7 different departments. Also very fortunate. And they also hired, they had really good funding, so they were able to hire some of the top people in the world. And so just being in that proximity, some of that rubs off on you.
Yeah.
Then, from that, then I went on to join Lipa, which I was also headhunted in. I know it sounds like it's a straight journey. Trust me, it's not.
The thing I want to say is who the God you're praying to, I want to please connect me.
Maybe some of those things are happening now that I'm in my own fintech. But so I ended up joining Lipa.
Yeah.
And now Lipa, this was a different experience.
Yeah.
Remember all these other startups, working with international staff, people who've worked in different parts of the world. Yeah. But at Lipa, these are now, this is someone like you and me. And then these are people like your age. And then at the time, they had just raised some funding, some decent funding. So, you're looking at this and you're like, okay, this thing is actually possible. I'm not out of my mind. These guys have done it. Yeah. And then because of the nature of my role, it was also for expansion. I got to work really, really closely with Eric. Who's a very talented guy. And so with that, I got to see, firsthand what it means to run a tech business in Africa, and what it also means to run a tech business in Kenya as a Kenyan. Yeah.
So my curious, I know for those who don't know Koko Networks, it's a clean energy bioethanol company, very successful in Kenya and other countries in Africa. So maybe it seems like the way you're interacting, you had like, Asoko was service oriented, intelligence, insights type research business, and you're, fairly harvesting data from, domain experts, CEOs, CFOs, corporates. But then also with this other, with Coco, you're also doing it, but from, the real interacting with real customers who are, not propped, not organized, but they have a way of giving you feedback. So maybe what was your experience, almost, engaging with two extreme audiences? What did you learn from that?
It's how to sell.
Yeah.
Because you sell different things to different people. So at Asoko, I learned how to sell to CEOs. How do you even start conversing with such a person? If someone brushes you off, some calls don't go as well. So sometimes you call someone and maybe they're in a bad mood. So you have to kind of like just filter out that and then learn how to sell to this specific audience. Then at Coco, now you're selling to people who are within this income range. So again, how do you sell? to that person.
Yeah.
Then at Lipa, because I was very now close to seeing how a fintech is run, it's now, other than selling,
Yeah.
how then do you communicate everything you're doing
Yeah.
to different people within the business,
Yeah.
within even the customers.
Yeah.
So I find myself, when I'm meeting maybe with a partner or we're in a management meeting,
Yeah.
how I'll speak there
Yeah.
is different to how I speak to now a customer who walks in trying to understand their pain points.
Yeah.
But so to summarize, it's been, how do you sell different
Yeah.
things
Yeah.
to different people?
Yeah.
Yeah.
Interesting. And then my other question would be, you're also involved in product development, and throughout this process, particularly with fintechs and knowledge businesses like Asoko and the likes.
Yep.
You've been in a space where there's also been AI coming on board. So how has the product, say, development journey changed or evolved, and what have you learned and what have you seen that you feel like you're almost taking it now to your new venture? Yeah.
So I'd say it's become a lot easier. Like AI has been around for some time.
Yeah.
It's just that now maybe people are talking about it,
Yeah.
and now the tools
It's
have
more
become a lot
mainstream,
more.
yeah.
It's a lot more accessible.
Yeah.
So I mean, as recent as the last fintech that I was working in, AI was just coming out. In fact, when you started ideating some of the products we were building,
Yeah.
ChatGPT wasn't out yet,
Yeah.
and it came out in the middle of that. And, people got really excited.
Yeah.
And that was the first version. I don't know what version they're in now.
Yeah. Yeah.
Personally, I like a certain platform. I don't want to market them. Yeah. And the platform I use are in version 3.
Yeah.
So with that, then you get to know, or rather, there are some tasks that are repetitive that you can delegate. So, for example, you mentioned at the beginning that I knew how to search, go
Up
through
to page
Google.
12.
Yeah.
Yeah.
Now you don't need to do that. Now it can summarize, but here's a tricky bit. You need to know something with AI. Remember, it's data.
At least
that
your prompt muscles need to be,
prompt needs to be there,
Yeah.
but you also need a little bit of subject matter
Domain,
expertise.
yeah.
Otherwise, it could tell you the wrong thing and you won't notice,
Yeah.
and you'll just go
Yeah.
along with it. So,
because like AI, there's a lot of high believability.
Yeah.
So it may be hard to sniff a bluff from whatever output it's sort of giving you.
yeah.
Yeah.
And that's very, very significant.
Yeah.
Because if you use that then to apply certain things in your business,
Yeah.
then you'll end up with some, things that are not exactly accurate. And if I was to come here and start saying some things that I read on an AI chatbot,
Yeah.
I think your viewers would start calling
Call
me
us out. Yeah.
Yeah, so it's very risky.
True.
The best thing is to have some subject matter, so that even as you're receiving those outputs from the prompts, you can then filter, and then even from that you can look at which platform is better for what than another platform.
Yeah.
So, for example, for me, there's a specific platform I prefer.
Yeah.
For the mass market is what they prefer,
Yeah.
but you can only know that once you have like some sort of idea
Yeah.
about what it is that you're asking.
Yeah.
Yeah.
Interesting. And then from like team working with people, you obviously you've mentioned you are in like almost all departments by the end of your time with Lipa and Koko. Given how early you came on board, what would you say would be sort of the right ingredients for a successful team, either from an organizational or from a department kind of viewpoint?
Maybe I'll answer both.
Yeah.
So from an organizational,
Yeah.
and this is something I've learned
Yeah.
even at Paycloud, is when you're building a startup from the ground up, remember you don't have a lot of systems.
Yeah.
There are a lot of things you're doing very quickly on the fly.
Intuitively.
Yeah.
Yeah.
So if and so the types of people you need to work with also need to be people who can iterate very quickly. So yeah, people usually say hire for attitude, and skill and all that, but you also need people who are nimble. So if I was to bring someone on board who's from a very structured way, they might struggle a little bit in doing things the way we are doing. And it's not because like they're a bad person or anything.
Yeah.
It's just the way of working in a tech business is different from when you're used to structure.
Yeah.
So I'd say maybe for an early stage business, you want people who can be a little bit nimble. So
Yeah.
it's usually easier for people who've worked in startups to get accustomed. And then beyond that, it's things like attitude. Skill you can always learn. You need, that's something you can train. But someone who can be a bit nimble, someone who has the attitude, people look at startups and they're like, they see all the nice offices, they see all the fundraising rounds.
Yeah.
That's PR. That's intentional.
Yeah.
People are meant to see that.
Yeah.
On the background or in the back end, where the sausage is made, things can get really rough. So you also want someone who can stay with that as well.
That chaos, yeah. Interesting.
I like that you've called it chaos.
I normally use the word it's organized chaos.
Yeah.
Of course, on the website is everyone with the same T-shirt. Those startup photos. They are all hugs and holding hands.
Yeah.
But really, it's actually a lot of noise in the background.
Yeah.
And you have to make sense of it.
Okay.
Maybe now coming to Paycloud, I know you are going to sort of explain it further, but I know it's a neobank focused on MSMEs and all the credit challenges they have.
Yeah.
But maybe start us off from how it started, identifying the problem and to where it is right now.
Yeah. So the core idea of Paycloud came up during my time at Lipa, and we noticed that as a fintech serving MSMEs, primarily retail, the way for you to serve them would be to give them your platform. And then what this would do for these merchants is that they would have your platform, then they have maybe their regular POS, then they have a platform from another user. And I mean, as a business owner, you're not going to leave money on the table. If this is going to bring you revenue, you'll use it, and that as well. So we found that it was increasingly creating friction for these merchants because they're constantly switching. And then with that, their data is also sitting in different areas. So you're using this for your gateway, you're using MPESA, you have your bank. And so if your data is scattered, then it means no one really has an overview of that. And, even a certain platform that I won't mention doesn't really communicate with the banks. Things communicate through a black box. So no one really has visibility. And so the business owner has their operational challenge of constantly switching. And then data-wise, they also have the disadvantage that their data is fragmented. So when it comes
I thought maybe things like open banking, where right now banks share sort of CRB data for customers with bank accounts.
Yeah.
Has that sort of scaled into fintechs, for example, or it's still everyone guarding their databases? etc. Because it seems like there's still a lot of fragmentation as you're mentioning that point. Yeah.
I mean, in a way, it's starting to happen. Maybe not as quickly as people thought. Open banking has been a concept that's been around for a while.
Yeah.
But also, banks are highly regulated. When it comes to data sharing and all that, there's so many things to think about.
There's an inbuilt incentive. Yeah.
Yes, there is. But it hasn't happened as quickly as people would like.
Yeah.
And then also, if you look at now I'm putting my startup hat. You see, when you're a large organization, for certain things to be implemented, unless you're operating at day zero, certain organizations that we also would promote, it becomes very slow. You might, I'm not saying we're the only ones who saw that, but when it comes to implementing, you need to go through your manager, budgets need to be approved. But as a fintech or as a startup, you'll see the problem. Today is a Monday. By Wednesday, we could have something very basic to go and test. And then by next month, we have a working prototype to automate it. Then a year from now, we have a whole product line that's doing, a couple of thousand or tens of thousands of dollars. So it's always easier for a more nimble a nimble company to start things, or for like a startup to start things, compared to, you know, a large organization, which many of these organizations are, to start. Then eventually, yes, they'll catch up. When I was during my days as a research analyst, fintech was just starting to come up, just starting to become hot. And then from my research, I found banks were actually, you know, catching up. So of course for them, like, things will be tried, tested, then they come in.
Launch,
so eventually they'll catch up, but a lot of the innovation has to happen with people willing to, you know, take the risk and push the limits. So yeah.
Interesting. And then so for example, now with the issue of you know, different data points and different like use cases for different fintechs, how do you see sort of Paycloud being as a solution for that, from either the merchant's perspective and also from other fintechs that you're trying to aggregate into your platform, and even MFIs, for example?
So with the way technology is advancing, it's a lot easier to open a neobank today than at any time in history. It's a lot easier to start a neobank in Kenya now than at any time in history, and certain things that have happened in the last, you know, couple of years have enabled that. Nowadays, if you want to integrate to someone, you know, it's just expose your APIs and you start working together. So collaboration is a lot easier now than at any time in prior history. And so when it comes to how does Paycloud, what's the future of Paycloud in working with others, it's really, because if you think about it, everyone is doing something, and so if you have a problem and it's not really in your core business, it's going to be, are you going to build that thing for yourself just to solve that problem, or are you going to work with someone who's already solving it and then get back to your core business? If you do the latter, you're going to have a lot more innovation, because, you know, you're going to get a lot more better. But if you're constantly solving this, because, and unfortunately that's sometimes how it could be in Africa, for you to solve something, you realize you need to build the infrastructure and all that. So it's a lot easier now to build a business such as Paycloud. If you have the right, you know, team in place. And I know eventually we'll talk about distribution, and if you can distribute it in the right format, then you can actually have a business.
So it's sort of like, I think you're mentioning the issue of like, it's sort of the time we are in, it helps you as a problem solver to focus on the problem you want to solve, and then partner with other problem solvers solving for other pain points that your customers still need, but in a more harmonized kind of way.
Yes, exactly.
And then as you've mentioned, the issue of partnerships and collaboration, and the fact that it's easier now to build than it were before, someone will look at it and say, you know, fintech is crowded, particularly in Kenya, for example. You know, why do we need another Neobank, another Paycloud? You know, do we need these extra apps that we keep being asked to download? So what would be your take around positioning within the context of the competitive or seemingly perceived competitive landscape?
I'm not even going to refute that. Fintech is extremely crowded. I was just doing some research. I was talking to one of our prospective investors who wanted to know how many, you know, when you say, you know, there are many fintechs and you guys are going to aggregate, how many? So I just did some research, I think it was 2 or 3 weeks ago, and the number I found was 5,000 fintechs in Africa today.
Wow.
Processing, you know, for B2B, processing.
So if you are doing 50 countries, that's like, is it 100?
I think that number is 1% of what's out there, because, you know, there's probably someone working in their bedroom, there's someone at lunchtime now
already
they are going to start writing some code. So that's what's recorded, and that's maybe 1% of what is out there. So there's, you know, I don't even know how to put an upper limit. So it's true, it's extremely crowded, and the other insight that, you know, we found is how fintech works in Africa is different from almost anywhere else in the world. In Africa, it's usually just that one product, and then you stick with it the whole time. Whereas in different places in the world, you look at the big boys like the Revolut, the Neobank. It's it's not just one thing. You're solving a problem, and you're solving it through like now your platform. In Africa, it's usually just that one thing. If it's credit, it's just that credit. But you see, your customer, in an ideal world, your customer needs financial services. So they need credit. For them to get credit, you need to score them, and you're scoring them through data. And that data sits with someone. And well, I was about to say unfortunately, but M-PESA has really done a good job in creating and developing, payments in Africa. Without M-PESA, many of these fintechs would not exist, even as a credit fintech. How do you get paid? So M-PESA has solved that bit, and then everyone else is kind of just doing that one bit, which makes it very, very extremely fragmented.
And even do you think like even the term neobank, like a lot of, based on what you've mentioned, like there are a lot of fintechs that call themselves neobanks, but it's not a whole suite of like solutions for if they're targeting SMEs, MSMEs, or individuals. It's still that one layer kind of solution. Do you think even there is a point you're seeing that there'll be an evolution in how we think of building fintechs from a full customer experience perspective rather than this one pain point that we are attacking, or one vector?
I mean, there has to be, because remember, once you solve for one pain point, you're
drawn to another kind of.
Yes, but at the core of your business is a customer. And what you want to do is you want to keep that customer for as long as possible. You want to make sure that their lifetime value is as long as possible. So you need to figure out ways to keep adding on top of your product, innovating as quickly as possible. So, you've said...
It's like you've reminded me of, during in my life in energy, we normally talk about this energy ladder. You move from paygo solar to productive use to something else. I don't know if there's a fintech ladder. I don't know if it's something similar to what Coco and others used to do, but it seems like, as you're saying, there is like the need to ask yourself, the customer, who is the customer and what is their core like needs, and then you work off from that.
My one of my old bosses told me a really good story. I know you don't have it won't take so much time, but he used to work for a big FMCG, a global one, and had a really fancy office somewhere in the Middle East, and part of his markets were Africa. So he used to come all the way till Kibera and spend a month or 2 months, and this is a high-end executive. They spend 2 months in Kibera. They live with that family. They look at everything they're doing. You wake up in the morning. Sometimes you even go to work with them, and then you
almost immerse yourself. You immerse yourself in their life.
Exactly. And you live in their house. And so by the time you're selling them, that soap, or you're selling them that toothpaste, you realize, okay, this family, if I sell to them that tub for 200 bob, and yet they can go outside and buy like a squeeze for a shilling or 2 shillings or 5 shillings. Then you're like, okay, we need to rethink about this. So maybe let's have sachets, and then you now figure out the supply chain around that. So coming back to and that's for any business, not just fintech. So coming back here is, yes, you're solving a problem, but you're not just solving the problem for its sake, you're solving it for a customer. And so if you put yourself in your customer's shoes, and you have as much empathy as is possible, then you're able to then see, okay, once I solve this, I can also do this for the customer. And if you solve these problems for the customer, then you'll actually have a business, and they will be hopefully loyal. I think they will be
more sticky.
And if you look at the big businesses that exist today, what do they call them? The FANG businesses.
Facebook, Amazon,
Yeah.
and all that. Yeah.
You start with one, and then from there you grow, and now you have like all these suites of services that are all related. But if I told you, right now we're working, with this Paycloud. Now I want to open a restaurant that's unrelated.
Yeah.
Then you start getting into trouble.
Interesting. So, and then, of course, the core of scaling any fintech or any startup is distribution.
Yeah.
And you've mentioned this 5,000, and you've said, they could be even 10 or 100 times more. I think, that is always a core challenge, right? How to scale this, so maybe talk us through about your learnings on scaling fintechs or startups. What you're seeing could work maybe for yourself. I'm not telling you to give your secret sauce, but from your own learnings, are there sort of lessons you're seeing in terms of distribution, or any areas of improvements that you're seeing emerging based on AI or disruption or just evolution of the sector as a whole?
I'd be very wary of giving like this is how you distribute
Yes,
or
yes.
anything. It's extremely niche based.
Yeah.
The most important thing that might be relevant is maybe pattern recognition. I just say that because it's something I recently learned. So depending on, by the time you've identified this problem, hopefully you have the skill sets to solve it.
Yeah.
Then from there you can think about how to distribute that, because how to distribute fintech is different from how you distribute soap, in the
Commodities. Yeah.
and the principles way it's largely the same, but then how exactly it's done, it's context driven. But if we use the principles example, what you want to do is just try and plug, especially in the early days, you want to plug into something that will make you, instead of selling 1-to-1, you can sell 1-to-100. So what's the best way for that? It could be platform partnerships. It could be signing a big corporate that has all these, your end users.
So like a partner or a node that can sort of blast out your message or your product to this 100 almost homogeneous customer base.
So you want to plug into that, then that opens up you to that large base, because remember, you don't have a lot of resources to start. You're when you're talking to your investors, you're talking to your partners, you want to give them the world, and you're not hiding or anything. You're being genuine. But the way for you to do that is, it's not going door to door.
Your first 1,000, getting your first 1,000 customers quickly.
Yes. And this will borrow from the Americans. They like to think big. They think in scale. How can this become a really big business? If you want to do it over 20 years, knocking door to door, it can happen. It'll happen over time. But there's efficient ways. It might be a bit tougher. You're talking to a lot of these partners. Some of them can be a bit tough on you. But just with a little bit of patience and pushing through, eventually things unlock. Then that solves the distribution process. And so that's at the principles level, and then you can apply that to almost any industry you're looking at.
Interesting. Then another question would be around fundraising. Obviously, we've seen, over the last 2 years, valuations coming down. That buzz that anything with tech. You just put a website with tech and, people just, throw money at you. I think that era is gone. So how are you seeing, a scenario of, scaling with, limited, either fundraising budgets or resources from investors?
So it's a lot easier for you to fundraise as a second-time founder. So if one day I want to start something else, I think it will be a lot easier. But as a first-time founder, remember you're unproven. Your concept is unproven, and people want a lot of returns. Then also looking at where we are in the world, the Silicon Valley VC model doesn't necessarily work in Africa because as a VC investing in Africa, how do you exit? PE here is not as big as in other places in the world. Our stock market isn't as vibrant as it used to be. So for a VC and exiting, they look at Africa, not sure. But at the same time, this is where a lot of the opportunity is. If you look at the wealthiest people in Africa, they sell the basic goods. They sell food, construction. I don't know. I'm yet to see anyone in the top 10 selling who has a
spaceships.
Or like a social media or anything. But the biggest, that's what they do because that's where a lot of Africa's needs exist. So, having said that, the most important thing for you to do as a founder, if you can get the funding, and fundraising is very tough. It's tough. It takes a lot of time. It takes a lot of effort. And if you're not careful, it can actually take time that you would ordinarily use to actually build your business. So if you could find ways to bootstrap, to generate that revenue, to prove that concept as quickly as possible, have like a growing user numbers, then that way you start to get people interested to have a conversation and all that.
Interesting. And then the other question would be around team, identifying a team. So you have two co-founders. How did it start? Sort of, is it like, hey, I want to join? How did it sort of? Because I think there's also a challenge in some. I've talked to other founders. They always struggle to getting co-founders, and also some investors prefer, not working with a solo founder. So it's sort of like, it sort of can be a hit and miss, I guess. But I guess for you it's working. So maybe something on that.
I don't know. Maybe we got lucky. My co-founders are they're very impressive people. So it's, I don't know, maybe there's an element of luck, but beyond that, if you were to choose, you look at what do they call it? You need to be able to complement each other. So in the team, of course, I'm the number one salesman. We have a number one techie, the CTO, the engineer, and you have someone sitting in between. In an ideal case for a Silicon Valley VC, they want someone who you can write the code and you can sell, which, those people exist. But ordinarily, you'll find certain people are really highly skilled on this one side and on the other side. So you need to find team members, and I'm assuming you're asking about co-founders, right?
Yes.
Who complement each other's skill sets. But also, you can't be a salesman who doesn't understand tech. Then you're in the wrong business, or you can't
at least understand the product.
Understand what it is you're building, so that when you're talking to customers, they ask you a question, and then they're like, okay, they see what it is that you're saying. And then also, as if you're a very technical, person, also understand a little bit about the business. What are the key levers? That way, you won't spend, too much time building like a button that works excellently when it's a very small cog in maybe your customer onboarding process or something that can significantly, boost revenue. So you need a balance of both, of both sides, but people who complement each other and people who can understand.
Do you need? This is a question I've been asking myself. Do you need someone in the co-founding team who is risk averse? Because maybe the CEO can, sell, grow, break things. Do you need someone who is like, I just want to know, because you're already taking risks by being a startup. So is there someone, like, do you need that kind of sounding board, or how do you sort of counterbalance those extremes of wanting to launch products every 2 days kind of thing?
I'd say I think there's this popular book called Outliers by Malcolm Gladwell, and there's also The Psychology of Money. If you want extreme returns, then you kind of have to be an extreme
Yeah.
person.
Yeah.
If you're in the middle, you play it too safe, then yeah, you'll just be in the middle.
Yeah.
But if you want to push the lever, then you need someone who can push it.
Yeah. Yeah.
So being too risk averse too early, can
Yeah.
slow your growth.
Yeah.
And also having someone who's risk averse when now you're really big,
Yeah.
you become Kodak. Like
Yeah.
you'll say, no,
Yeah.
let's just
Yeah.
focus on this
Yeah.
business. So
Yeah.
you need people who can, and also when you take risks, it doesn't mean that it's always going to work.
Yeah.
You just need to make sure that they work.
Yeah.
The times they work make up for all other times.
It's interesting you've said. It's like someone was saying, I already have regulators, so I don't need another regulator in my company.
Yeah.
That was on a lighter note in terms of like they need to, avoid pumping brakes.
Yeah.
Maybe last one. Are you seeing any areas that you feel are ripe for a disruption within fintech in Kenya or in Africa? Or even trends or anything that you feel like, maybe this could be something.
Things are always ripe, and they're ripest where you are.
Yeah.
I couldn't really give much insights about Africa in general.
Yeah.
Because Africa again, it's a collection of 54 different markets,
Yeah.
and they're very different.
Yeah.
Even if you look at East Africa,
Yeah.
how you'd approach Tanzania is different from how
Yeah.
you'd approach Uganda and Rwanda.
Yeah.
So giving a blanket like this is where like Africa is going. I'm not going to attempt to do that.
I agree.
But if I start with like the markets that I'm more familiar with, it's things are everywhere. If you just open your eyes, you see how people are doing different things. You can spot an opportunity. The only thing is, are you willing to take the time and make the effort to do it? If I come to like my space now, which is more specific, yes, there are so many things that we can do to improve, even like the MPESA experience. If you go to you go to other places, people tap to, it's like a 2-step process.
Yeah.
We're still at 6 to 10 steps, even though some of those technologies exist within MPESA, and they tried.
Yeah.
So the opportunities are always there.
Yeah.
You just need to spot them.
Yeah. I feel for me like cost of credit, I think it's still there's still a pricing of implied perceived risk, maybe because of data points that are missing, or this disaggregated data. So I feel that from an outsider, I feel like if these MSMEs need to grow, their cost of capital needs to come down. I think the other points I feel is like, if I'm an MSME, why can't I finance real estate or mortgage through the data that I already have, right? You'd find like they finance their business from fintechs, but leave the fintechs, go to SACCOs, banks, to access education loans, mortgage, the other traditional and human needs, and then then there's the cost issues of over indebtedness, because they're borrowing this way. There's not like harmonization. So I feel like those like solving for also the entrepreneurs in those SMEs and MSMEs can be an area where fintechs could unlock.
For sure. And for us, we've focused on the MSME funding.
Yeah.
Solving funding for salaried employees it's tried, it's tested, it works.
Yeah.
But for MSME funding, it's
Yeah.
you've mentioned data. That's a crucial bit. And so once you've identified that, maybe a few things I've learned from Elon is then you break it down into first principles. Why is it hard to lend to MSMEs?
Yeah.
You realize it's a data. Then how do we solve the data? Oh, it's because these guys they're using 7 fintechs. Is that way these 7 fintechs could work together?
Yeah.
Usually it's it depends.
Yeah.
Is there a way we can get this data in one place?
Yeah.
How would we go around doing that? And then testing every single node. until you actually solve it. Then solve for that. But that's the data side. Something like cost of credit, it's related to how much you as the funder are getting the credit at. So if you're getting it at,
so we sort of cascade our own costs into the MSMEs, I guess. Yeah.
yes.
Yeah.
So it's inbuilt. I mean, as an African business, you already attract a certain risk premium. So that it's already different.
Yeah.
And then basically that's it. Something else I'd recommend, like as a founder in this ecosystem, is we have so many big businesses and people who have built structures over time. Like you look at the pension funds and all that.
Yeah.
They don't like to invest into what's emerging. But then they'll build all sorts of things. So I think with reinvestment into the ecosystem, that will also help things like the cost of capital and all that.
Yeah, I think it's always more expensive to finance your startups with someone else's money.
Yeah.
Because there's a premium they attach because you're competing with the also local startups, right? So if someone in California or wherever, Miami, is putting $1 here, you have to convince them that whether it will happen or not, that you'll get $5-10 more dollars. Other than them putting it in Dubai or someone else or somewhere else. So I think I definitely think there's a space for local capital to bridge the gap. I know we are trying as angels, but it's a drop in the ocean. Last question, book recommendations. Anything you're reading, learning?
0 to 1, it has to be like number 1, top 10.
Yeah, I like that. I've read it twice now.
Actually, I have quite a few. There's the 1%.
The 1%, okay.
No, I'm forgetting who wrote it. So I'd recommend 0 to 1, and then there's a book. I think I recommended this to you the last time we met. It's called Conversations with God. It brings up this whole thing into this thing is not just it's not just what it is. I think entrepreneurship as it is an extremely spiritual journey, and all these other things, for the Christians, we say there's love, there's patience, all these virtues. It brings them out in you, and as an entrepreneur, you're actually doing your God-given ability of creating. Because remember, like, this thing did not exist, and then you're bringing it to life, and then you're experiencing it. So I'd recommend Conversations with God. It's a very long book, but it'll open up like your mind. And 0 to 1.
Cool. So thank you for taking time to speak and share your vision and your story. Obviously, we'll put links to Paycloud and your profile for people who want to engage as clients, partners, investors, and work with you. So looking forward to the building phase and growing the business, and all the best.
Thanks for having me. This has been very fun. I forgot to mention the authors. So 0 to 1, Peter Thiel.
Yes.
Then Conversations with God is by Neil Donald Walsh.
Yes.
But thanks for having. This has been very cool. And asante.
Asante pia. Thank you.